When I look at that graphic, the thing that jumps out at me is it looks like a graph of compounded interest.
Yeah, right.
And hi again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Boy, we appreciate you joining us, and we love your support. Again, I'll remind you to like these videos and subscribe to the videos. How do you do that? Well, you click on that little bell icon down below, and also make sure you share these videos, and we can tell you have been doing that, and we thank you for that, because we continue to be one of the fastest growing ag podcasts out there anywhere. And it's all thanks to your support. And I want to welcome aboard. This time we have Matthew Kruse with us. He is the president of Comstock Investments. Matthew, good to have you with me here as we look at the general marketplace. Boy, it's been a long downward grind in the grain markets here for weeks on end. And the farmers are getting very concerned out there, Matthew. There is a risk of, do we wait it out? Do we sell at a lower price? Is this a sign of a bottom? I mean, how do you teach patience in a market like this?
Oh, it's tough, and I'm in the same situation because I have a farm too, and I don't plan on selling anything at these levels. We did forward price a little bit ahead of time at moderately profitable levels at 490 December, and we had some extra orders in ready to go at just over 5, and then we never got there when we started our grind lower. And so I a lot of it's probably going to depend on everybody's cash flow, but I don't plan on selling anything that I know for me is going to be at negative margins. And so, but I can't speak for everyone.
When you look at the season's crop weather, the ag weather outlook, it doesn't look like we're going to have any kind of a flash bulb event at this point to really lift the market very much between now and harvest. I mean, a lot of the corn is already pollinated now.
Yeah, I mean, we still have 5, maybe 6 weeks left of kind of critical growing season left related to weather, and I know for quite some time the ag meteorologists out there have been talking about this pending La Nina, and it really hasn't shown up much here so far in the middle of the summer. And so is it really going to show up here in the next month by August? And it's it's maybe looking like there's going to be a general drying trend. Like you said, there's plenty of soil moisture out there in a lot of these areas. And, as long as we don't have kind of a really high levels of heat, flash drought, we're probably going to be okay. And in the 10-day forecast, anyway, that gets us to August 1st, it's actually just the opposite. That it's surprisingly cool, in our area in Northwest Iowa. I mean, it's some days might not even get to 80, going to be in the high 70s. And so we probably need more than that. We need the heat units at this point. And so it's just the opposite. I know the corn likes the cooler nights, so that's a good thing too, but it kind of depends where you're at, I suppose. So yeah, there's for the most part, weather appears to be non-threatening. And even if it does get warm going into August, I don't think that's going to be enough to spook the market. I think it's going to have to get real hot real fast, and we'll see. But so far, we aren't seeing anything like that.
We don't really have any analog years that match this, do we?
Not really. There's been a lot of comparisons to 2014 with the market kind of collapsing, and I one kind of continuation chart in corn that I put up there that I don't know, it gives you a real good comparison, but you kind of see in the sharp fall that we've had here basically since in the last 18 months. And we're back kind of sitting right at that $4 level, which is, if you look back from the kind of the 2014, we went all the way down to 325. And that's what I think the market was most concerned about. And especially going into the July report, if the USDA had not updated those or reduced the old stock numbers from last season, that's probably, we were looking probably closer to 2.3 or 2.4 billion bushel carryover. And I think that would have been enough to send us back below $4, frankly. And that kind of the fact that they reduced those numbers and now we're something closer to 2.1 billion bushels, it's not exactly bullish by any means, but it kind of staves off disaster is maybe the way I'd put it. And so at this point, I don't think there's a real strong argument to move below $4 at this point. I'm not saying that we couldn't do that yet. But I think, in my opinion, if we do, I don't know that we're going to be there very long because demand's been pretty healthy. I think you'll see, if we do move below that, I think you'll see buyers step in and kind of continue to boost demand. Ethanol's margins are very strong right now. The corn export market has been surprisingly resilient despite Brazil's harvest season kind of coming to a close. We're kind of entering into their peak harvest and export window, but their basis levels have been pretty high to the point where our corn FOB is priced competitively, and so that helps things out tremendously. And so, I'm kind of hoping that like a lot of people, that we'll start to build kind of a base here at this $4 December corn. But it's also possible, we could trade sideways for a while, before the market gets excited. Our real challenge here is what's going to spook these managed money out of their short selling positions, right? That's been tremendously successful for them at this point, just riding this market lower. And, we just got into talking about, weather probably isn't going to do it. If there was some sort of flash drought that might scare them out of their shorts. But, we aren't seeing that. It's possible in the August report, we could see some lower planted and harvested acres. We've seen estimates from, 500,000 to 1.5 million acres reduction between corn and beans combined. Of course, you're hearing a lot of chatter about you adding a premium, and that's to the national yields. And that's really the issue here is, Illinois and Indiana are just going to have a stellar season. They're on track. I don't want to put the cart before the horse, but they're on track to just have one of their best years ever. And it's probably no coincidence the fact that those areas are much closer to Chicago, where a lot of the CBOT and grain trading community is. And so they look out in their back door and they see these awesome fields and everything. And so, I was reading this morning, RJO, our clearing firm, was talking about that there's chatter. I don't know what chatter means, but there's chatter of using a 185 bushels per acre. I'm not there yet, but the fact that people are, giving this credibility, just shows you that that what the trade is thinking, and so that can easily offset. If you use a 183, 184 number, that can easily offset kind of a decrease in harvested acres.
Your family has interests, farming interests in Brazil, and I know you visit there every once in a while, and I'm curious, what is the exchange rate like now between the U.S. dollar and the real?
It's good.
Has that changed much here during this growing season in the U.S. or not?
It has. I was just looking at it a little bit ago. It has been weakening a lot. A lot of other currencies in Latin America and Japan have been weakening. I think since January 1st, the Brazilian real has weakened about a little over 15%. And what that means is it makes the price attractive or more attractive in US dollars to foreign buyers, but the Brazilians still get more, arguably 15% more in their domestic currency. And so you're still seeing some good profitable selling opportunities for the Brazilians despite kind of these global prices languishing. And so you've seen some farmer selling in these areas. I think most people that have grain ready to sell, they've seen almost a 20% boost since their harvest lows in the case of the soybeans. And so I think a lot of farmers are taking advantage of that and selling. Despite that, I looked at the numbers here recently. As I mentioned earlier, our corn exports are still competitively priced to what they are in Brazil. Not by much, it's maybe 15 cents a bushel is all what the difference is. But last year at this time, it was we were like 70 cents below And so it's almost like a buck difference from last year to this year, and so that helps a lot. I'm not sure what that means. You can speculate at this point that either the crop isn't there, or maybe their old crop stocks aren't there. Kind of similar to the way the USDA handled things. After a year later, they come back and say, "Oh yeah, by the way, there's 150 million less bushels than what we said there was." And so that just the fact that their basis is so strong would kind of indicate that there's maybe not as much crop there as they thought.
Okay, so let's bring it back here to the U.S. USDA has really raised a lot of eyebrows this year with their numbers that they publish from time to time. You have put together a 2024 corn balance sheet, and I wanted you to walk us through that. Let's bring that up on the screen here. You have a couple different scenarios there, and apparently that shows maybe some ranges of ending stocks depending on your point of view.
Yeah.
So where do you fit in on this? Explain this.
This is just a hypothetical that I put in. The neutral category is basically the July USDA report where they place us at, and so I kind of put in a couple scenarios that what do we need for the market to turn bullish, and what would make the market even more bearish at this point. And so, leaving I left the harvested acres the same in the bearish category. We could kind of look at that first. But I increased the yield to 183. And so what does that look like? That adds another 100 million bushels almost to the production. I increased the demand. And so it puts our ending stocks a little bit higher at 2.114. Now maybe you can offset some of that from a reduction in acres. That would be possible. And so I guess my point is that's what, if USDA does increase a bigger yield, this is kind of what happens, what we look where our ending stock scenario looks like. In the case, if we need prices to move higher, we need a reduction in acres. We need to use a lower yield. I myself am probably in that lower national yield, using 178. I would argue that's still a record yield, right? And so no one's really arguing that this is a bad crop. We're all in it, seem to be in agreement. This is a really good crop overall. Just how great is it? Because last season, 177.3 was a record. And so, anything above that is another record. And so is it 178? Is it 183? That's what we're all trying to debate. So, if you reduce those acres and reduce that yield, that gets ending stocks back to 1.8 billion bushels. And that, isn't going to send prices to the moon or anything, but I think at the very least, we give you a shot back at 450 December, maybe 475, some in that area. I don't know that it would get us back to $5, but that's kind of what needs to happen. And so, those beginning stocks there, I use that plug that in for the most recent update at 1.877. And that's really what kind of saved us here. It's frustrating because I feel like the USDA kind of had that information for quite a while, and they sat on it. Had they, kind of released that 6 months ago or more, I think, I'm not saying we wouldn't have moved lower in the markets, but I think there would have been a little bit more of a rally that would have provided some more selling opportunities for farmers rather than, just the market collapsing as quickly the way it did.
Stocks to use ratio over 12%, that seems pretty comfortable.
Absolutely. Yeah. So it's, at one point I was thinking, is it going to be closer to 15%, if they didn't update those old stocks? And so 12%, it's, I think anytime you're at 2 billion or more, you have pretty healthy, ending stocks. And in those years from 2015 to 2019, we pretty much hovered between $3 and $4. And we were pretty much always between that 2 to 2.2 billion bushel levels. And so there's just no reason, for kind of the corn market to do much as long as we're, above that 2 billion ending stock level. So that's what we really need to see, is kind of reduction below that. So the USDA can play with these numbers as much as they want to kind of keep them above that level, and so I'm hopeful, but can't guarantee we're going to see a reduction in acres. I think that would help a lot.
Okay, a little bit ago we showed the continuation chart for corn. You did the very same thing on soybeans. So what does it show?
Yeah, so you can kind of see here that we topped out here in basically in 1750 back in 2022, and we've seen some steady drops followed by consolidation, followed by steady drop, more consolidation, and so now we're just kind of continuing that grind lower. We're sitting here at this 10, just about bounced off this important support level at this 1075 area, and so that's, I think, a really important level that we need to hold. I'm a little bit more concerned about the beans just because of the the pending crop in Brazil is already, they're calling for more acres and a bigger crop season, and so there's really hasn't been anything that we've seen to uh, demonstrate that there is a bottom yet, and so we're kind of continuing in this lower pattern at this point. Um, but we really need to ideally move back above this 1150 at a minimum if we're going to kind of negate this these bearish pattern that we've been experiencing. And so we're really hoping that this this $12 level was important. You can kind of see here that we set that back in late 2021, and then this year we've broken below that. And so if in soybeans, similar situation to corn, they're calling for a higher yield. In some instances, they've been throwing out 53 bushels per acre, which would be a record yield. And I think, if that were to happen without any reduction in acres, unfortunately, you're probably still going to want to go back and mark, at the very least, kind of retest these support levels at this 1050.
Well, let's look at that soybean balance sheet then for the 2024 crop here. Ending stocks, according to USDA, 435 million. Stocks to use ratio only about 9% here versus 12% in the corn. On the surface, that looks like it would be more friendly. But man, we just can't get any export sales on the soybean side. Corn, we can move. Soybeans, we can't.
Just recently, China has begun making some purchases, but they're way behind schedule. And I don't know that anyone really thinks that they can catch up at this point. Our soybean exports aren't as competitively priced as Brazil. I think Brazil still has a lot of exports yet to come. They're kind of coming out of their peak export window. There's reports that their July exports are going to be a record. You kind of got to look at where their year-to-date exports are, which they're not far off from last year. So I don't know that it might be a little premature to say that they're going to set a record export year again here in 2024. But yeah, I came up with a couple scenarios of bearish and bullish scenarios. That neutral scenario, that's basically what the July report from the USDA has us pegged at right now. And so we need to see demand increase from more exports from China. I don't think that we got all bulled up on this renewable diesel thing. I don't know that that's going to take off in the time frame that we need it to happen. There's also a lot of our soybeans are being replaced by this used cooking oil from China, and so that's not helping things at all. And it's a little bit off, but not too far away. In a couple months, Mato Grosso is going to start planting their 24-25 season already, and so in basically 2 months or less from now, you're going to start hearing a lot of chatter about Brazil's getting ready to plant their big crop, and focus is going to shift from the U.S. crop to the pending Brazil crop, and so it's a little ways off yet, but it'll be here pretty quick, and so it's possible we could see a reduction in acres, but just kind of shedding 1 bushels per acre down to 51 helps reduce ending stocks down to 360 in this potential bullish scenario. Now again, that isn't going to take prices back to $13 or $14, but it maybe keep us back closer to 12, 1250, someplace in that area. That's essentially kind of what we need to happen, what would be ideal at this point. back in I think it was 2019, we had ending stocks at nearly 1 billion bushels for soybeans. So it's not as dire as that. But we also, 2 years ago, we had ending stocks at uh, 200 million bushels or less, and so we're quite a ways above that. We're twice those levels now, and so yeah, I think the market's just going to look for more indication from weather here in the next month, and then it's going to, of course, keep an eye on Chinese exports.
And I will just put in a footnote here that China has had some historic flooding too here recently. So I don't know if that'll impact their soybean production much or not. You also have a graphic here that I thought was really interesting, and it's related to the production area in Brazil. And it really illustrates the trends that we have seen there. Explain what we're looking at here for the upcoming year of 2024 and 25 there.
Well, I mean, we talk about the number of acres that Brazil adds every year, but I put it into percentages, what their land area does every year, what it averages. And if you take up this entire 25-year window, it's about 5.4% year over year growth is what Brazil has averaged. And that's quite a bit when if 1 year to the next maybe wouldn't be so big, but over a 25-year window, that's a very healthy growth. And there's really only been 2 years when it went down. If you remember back in the 05, 06, when prices were terrible, and I think by 2006 prices went from like 1050 down to 550, so they almost cut in half, and that affected everyone, even in Brazil, and they actually cut back acres, and that was the last time they did that. They cut acres in that 06, 07 crop. And ever since then, they've added acres every single year. They've not made a cut to acres ever since. And so, they've had some more modest years at, 2% growth, but you can see here how the growth has been increasing. And, but I guess this last year, 2%, I don't see their growth in acres doing much more than that. Lower commodity prices affect them the same way it does us. But I'd also add that 20 years ago they were planning, or 25 years ago they were planning like 50 to 55 million acres, and now they're at I think 113.7 million acres this last crop, and so they could even a 2% increase, it adds 2.5 million acres, and so it's 2%, but it's on a much larger acreage base.
Yeah.
That it still makes a big difference. A modest increase of only 2 million acres. That would be considerable here, I think, in the United States, because we're only planting 86 million acres of soybeans compared to their 113 and proposed 100 as much as 117 million acres. And so, I hate to say it. People ask, well, what's going to stop it? There isn't a great answer. It's just lower prices. Honestly, that's what kind of, maybe it doesn't stop it altogether, but it kind of contains their growth a little bit. At lower prices affects them too. And so, I just thought this would put things in perspective, what the year over year growth has done in Brazil's land area.
When I look at that graphic, the thing that jumps out at me is it looks like a graph of compounded interest.
Yeah, right.
And you know how that works at the bank, right?
Yeah. It'd be a good interest rate year over year.
Yeah. I did want to ask you before I let you go. You have an event that will be coming up. It used to be an annual event. I think it sounds like it's coming back once again. You call it the Family Farm Masterclass. Now, I just want to tease that a little bit. You have had it in the past for a few years, and that'll be coming up after the first of the year. So it's coming up. It'll be way out there, but it's a pretty important event, and I just wanted to call attention to it so people can kind of keep their radar up about that. We'll have more information coming out, but explain what that is. What is the Family Farm Masterclass?
So it's an event that it's a nonprofit. First off, it's not something that we're trying to make money off or anything, but essentially we're trying to create an educational opportunity for farmers to kind of professionalize their family farm. Farming has just gotten so expensive, and the numbers and valuations have increased so much that management errors, marketing errors, budgeting errors, things like that can really have a dramatic impact on your bottom line. And so uh, I'm just trying to put some professional speakers, high quality, nationally recognized speakers together to kind of create a learning event, because there's so much out there uh, for equipment. You know, you get the Farm Progress Show. Everyone loves to go see the new expensive equipment. I don't think anybody can afford it this year, but you know, there's other events that you know, talk about new agronomic practices and how we can yield more, and those are important and great and fun and all that. But I don't think there's as much of a focus on how can I be a better manager, how can I make better decisions, how can I be a better leader, how can I improve my financial management and strategies and things like that. So I'm just trying to create a learning environment for that. You know, in the business world, you know, if you were compared it to a business, I mean, you're talking multi-million dollar businesses, and a lot of these uh, businesses would have um, professionals that got to an MBA, had education on certain things, and I think a lot of farmers maybe didn't have that, so they've kind of grown into that role. And so, just trying to create experience where they can come together and learn from other ag professionals. And so, we have some really large scale professional farmers that are going to come and present about how they manage their operation, and I think take things to the next level. And uh, what we see in our industry, of course, is tremendous consolidation going on. And that's been going on since they started tracking it, you know, 100, 200 years ago. So it isn't anything new, but in the lean years and the difficult years, that consolidation increases. And so uh, it's getting, you know, harder and harder to kind of keep the family involved in the farm. And so we're just trying to, I know we're not going to stop it, but if we can do something to slow it down or help somebody make a decision or think differently about how can I bring my son or daughter into the operation that makes sense, you know, I would consider this a success. And so succession planning is a big part of it as well. You know, there's a panel on, of course, grain marketing. There's a panel on entrepreneurship, talking to you know, different people in the ag media and social media influencers on how they created a side business basically to help support their farming operation, which you're seeing more and more of. And so but I think I think succession planning is a big part of it, as I mentioned, because I know farmers out there struggle tremendously in this matter, because there's some there's can be a lack of communication a lot of times. I think the siblings have different interests, where maybe one sibling wants to stay on the farm, others want to go someplace else. And so how do I handle that, you know? Uh, and so it's something that doesn't get talked about enough, because it's extremely private. You know, people don't want to talk about this in public with their neighbors or anything. And so it just kind of gets bottled in a little bit more than it should. And so this kind of creates an opportunity for people to go and learn and about that. And so, you know, the event is called Masterclass for a reason. You know, isn't just a flash of title. I mean, there are really good producers, top producers from the nation that are going to be coming to present. And you know, what better opportunity to come and learn from them? You know, if even you can get one good idea out of this, you know, it would be worth it. That could impact your operation for years or decades to come.
Well, I'm sure we'll be talking a lot more about this coming up later this year, but just wanted to kind of put the seed out there to plant that idea in everybody's mind. And I believe this will be around the third week in February, right?
Yeah, the 21st and 22nd of February in downtown Des Moines at the Hotel Marriott.
Awesome. Right in the middle of the country. Okay, well, we'll have more details as we get closer to that event. I'll probably have you back and we'll talk more about that. But anyway, just kind of pencil that in on your calendar as a very important date. Matthew, it's great to talk with you. Thanks for coming on board with us and explaining everything today. I appreciate that a lot. Matthew Kruse, president of Comstock Investments. And that'll do it for this episode. Thanks again for joining us. Make sure you share this video with others. And for producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time right here on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.